So one of the things that we've been watching pretty carefully has been the coronavirus situation over the last few weeks. Now, we did see cases elevate in the United States. Since then, it's calmed down a little bit, but still at elevated levels. We've seen increases also in international markets and in emerging markets as well. So the virus still has not gone away. And that's something to keep an eye on in case we see another flare-up, potentially as the weather starts to deteriorate. Other things that we're watching is what the Fed is saying out there in the markets. They just recently announced that they're going to be keeping the inflation number still at 2%, but now making more of an average at 2%, which means that it can actually go above 2%, which allows them the flexibility to keep interest rates relatively low for an extended period of time. And of course, the other thing we're watching for is the political situation between President Trump or the Republicans and the Democrats with Joe Biden. Of course, how those policies start to form as we get closer and closer to the elections, and the impact it might have on global trade. The biggest thing that we're watching at the moment is really the fiscal stimulus. Now, this was a stimulus plan that was supposed to have come out in August, and really to help support the U.S. economy, and particularly consumers who were seeing their unemployment benefits get reduced by $600 a week. Now, President Trump put in an executive order to bring that up to about $300 to $400 more, depending on whether you get state, local aid or not. But really the important part is where they're going to get to in terms of this actual dollar amount, right now estimated between $1.5 and $2 trillion, and where it's exactly being targeted. That's the really contentious part of this fiscal stimulus package. That really, when we get that stimulus package, I think will really drive markets higher from here. But if we don't, or if it takes a lot longer, we could see markets really react negatively to that. The other thing that we're watching carefully is obviously the elections between Trump and Biden, and really if any policy changes are going to occur between now and then, and the impact that might have again on global trade. That really is going to be an important element to decide which sectors you want to be invested in and which sectors you really want to stay away from. And then third, we saw was really low expectations on the earnings front, heading into the last quarter, and companies delivering really stronger than expected. And I think that was really because people were expecting a worst case scenario coming out of COVID, and companies have delivered a little bit better than that. Now going forward though, because the expectations are not going to be as low, the question really will be, can companies continue to deliver strong earnings from the previous quarter, or will they start to flatten out a little bit, and that might show some signs that growth is starting to slow down. So that's something we're paying a lot of attention to. That really is what's going to drive whether or not markets go significantly higher from here, or whether they start to retreat, given where earnings have potentially peaked for the current year. And there's going to be, three things to watch out carefully when it comes to a medical breakthrough. One is just the fact that we might get, better test kits out there, faster and cheaper, so people can utilize that and know if they have the COVID virus or not. Secondly is potential immunity, coming through people who may have had it in the past, and have that, pass through back to people who currently have it. And probably the biggest one right now is the vaccine. Now, though we don't have a vaccine in place, there's definitely going to be, many companies out there right now that have gone to different phases of the vaccine. Some, have advanced stages in China and in Russia apparently as well. But really, if we do see a vaccine getting close to being, found, then that means a lot of great positive things. It means that people will start to come back outside and start to spend on the economy. Companies will hire back at a faster pace. Confidence levels will increase, and really just more broader spending on a broader economy. And that really would give markets a significant boost from where we are today. So it's a very important catalyst that could really send markets significantly higher from here. And of course, the other part to that really is going to be is that if we get that, then people will likely start seeing that the situation on the virus level come down quite dramatically. And that's also another important thing, the confidence. Well, this is a very difficult time to be managing portfolios. In a situation where we've got to balance out, current risks that are out there in the marketplace and an unknown in COVID, and then looking at longer term, if we do start to see, unemployment start to decrease, jobs coming back, demand coming back, increasing amount of stimulus, or even a vaccination that comes through. I think that's an important element that will actually drive markets significantly higher from here. And we don't want to miss those opportunities. So we've created a barbell strategy. One where we want to be defensive by owning large cap companies, focusing in the strongest economy, which is the US marketplace, active management, and that really to us gives us a very good defensive part of our portfolio. And then on the other side, we're going to look for opportunities, that could go, if markets go significantly higher from here. in things like industrials in the United States, financials, and even small cap companies. But we're not going to play that by adding full exposure to those, but actually play that through the option market. So where we pay a premium to get exposure if markets go higher, in those areas participate strongly, but not really participate if the markets sell off and those areas get hurt. Only thing we'll give up is the premium assigned to those options. And I think that's the right way to play this. We're balancing off the current risks and still looking for those opportunities should markets go higher from here.